Welcome, dear traders. You are watching a recap of the Asian trade on April 4 with me, Kate Tichina. And yesterday, the sentiment on the global stock markets was mainly shaped by the OPEC Plus announcement about further production cuts. The decision of the cartel to curb output drove the shares of the energy sector higher. The key news for the Asia-Pacific region today is the rate decision of the Reserve Bank of Australia. Considering the fact that the US Federal Reserve and other global central banks may need to maintain their hawkish approach, the Reserve Bank of Australia was among the first to raise rates. The regulator started the cycle of rate hikes in May 2022, bringing the rate from 0.1 to 3.6% after 10 consecutive rises. Now, the key factor for the Reserve Bank of Australia to slow down its monetary tightening was weaker than expected retail sales data, which may be interpreted as a sign of a recession. At the same time, the inflation rate also decreased in February and stood at 6.8%. In the current conditions, the Australian regulator deemed it appropriate to pause the rate increase. According to Reserve Bank of Australia Governor Philip Lowe, the decision to halt interest rates steady will allow the central bank to assess the state of the economy and the economic outlook amid persistent uncertainty. Yet the central bank still seeks to bring inflation back to the target range of 2 and 3%. Therefore, the board expects that some further tightening of monetary policy may be needed. In the meantime, an unexpected cut in oil output by the OPEC Plus group triggered a rise in the oil quotes. The surge in energy prices may hinder the efforts of global central banks to tame inflation, which is still running well above their target levels. Federal Reserve Bank of St. Louis President James Bullard said that an increase in oil prices could make the Fed's job of lowering inflation more challenging. So the threat of a recession in the world's largest economy has become real again. The evidence of the weakening economy can be decrease in the manufacturing PMI, which contracted for the fifth consecutive month. Therefore, some investors expect the Fed to put its rate hiking cycle on pause. Market participants hope to see a change in the Fed's policy and prefer to downplay recession risks. According to the CME FedWatch Tool, markets expect a more hawkish scenario in the Fed's policy, and the likelihood of a further rate hike of 25 basis points is now assessed at just above 55%. Still, almost half of investors are ready to see a dovish turn in the Fed's policy. These expectations have kept the upside potential of the US dollar. On a Monday, the US dollar index depreciated against the basket of 6 major currencies, dropping by 0.5% and hitting the daily low of March 22. As we can see on today's chart, the greenback continues its losing streak. In the course of the Asian trade, its index fell to the level of 102 points. From the technical point of view, the US currency is heading for the support level of 101.30. In the early session on Tuesday, the quotes were consolidating in the narrow range between 102 and 102.30 in the current conditions. The US dollar may resume growth only amid positive macroeconomic reports from the United States, such as a strong ADP report on employment change and non-farm payrolls. On a Monday, Wall Street closed the session with gains as it seems that the stock market still downplays the recession threats. The Australian dollar followed the lead since it's quite sensitive to changes in the risk sentiment. Besides, growing oil prices provided support to the Aussie. As a result, in the morning trade, the Australian currency outperformed its cross currency rivals and advanced to 0.6795 against the US dollar. However, its rally was stopped by the dovish statement of the Australian Central Bank, which sent the quote to the range of 0.6742 and 0.6795. During the Asian trade hours, the Australian dollar was very volatile and dropped to the level of 0.6753. The Japanese yen is also sensitive to risk sentiment, and just like the Australian dollar. Yet the yen acts as a safe haven currency and reacts to the dynamic in the US bond yields. While the Japanese government bond yields remain zero, the steadily rising yields of US treasuries wane on the yen, and today the 10-year treasury yield stays almost unchanged, while the 2-year treasury yield dropped by almost 1.5%. This allowed the yen to recover to 132.20 against the US dollar in the early trade on Tuesday. Later on, the yen was supported by a strong Australian currency that strengthened across the board, so the yen advanced to the range of 132.20 and 133, but then closed the session by falling to 132.60 against the US dollar. The further trajectory of the yen this week will be mainly determined by the US economic data and the rate of a greenback. Tomorrow, the Reserve Bank of New Zealand will announce its decision on the interest rates. Unlike its Australian counterpart, the regulator in New Zealand intends to maintain a hawkish approach. Yet this hasn't supported the national currency in any way. The New Zealand dollar approached the level of 0.6289 against its American rival and continued to decline while trading in the channel between 0.6283 and 0.6312. It seems that the Kiwi traders have already priced in the scenario of a rate hike expected tomorrow. These are the main events of the Asian trading session on Tuesday. InstaForex is here to provide you with the latest news for your profitable trading. We keep close tabs on a global financial market so that you can get the most up-to-date market analysis. Please leave your comments and ask your questions down below, and see you soon.